Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York on Monday, the 21st day of April 2014, and this is the daily report for gold and silver. I trust everyone had a good 3-day weekend. As we opened the week today, we do have lower pricing across the board in the precious metals markets. Although off of the low being 1282.10, we do have gold trading approximately $5 lower at 1289.70. The high today has been 94.90. Silver also trading under pressure and actually trading below what I consider to be pretty critical level of support, which is 1958. The low 1920, the current 1940, the high 1957. More on silver towards the end of the show. You know, traders, as we look at this market and consider fundamentally the things that have gone on over this last week, we can see why there's been pressure overall in the metals markets, precious metals markets, One, they did come to a resolvement in terms of the miners over in the palladium mines in South Africa to raise their wages. So we had some pressure there. In terms of gold, what we have seen, of course, is, I believe, the premium that had been really added to the price of gold with the current geopolitical uncertainty in the Ukraine has eroded as they have reached some sort of tentative agreement. However, that agreement, of course, at any time can back out. We'll have to see how that unfolds. But because of factors such as that, we have seen this market really come down from these most recent highs. The recent highs, of course, have been just close to about 14. We had the market come down, test 1275, move back up over 1333. And if you recall, the way that we're looking at it, of course, is really our A here, our B wave, and then I believe we're in our final C wave right now. And in terms of where I think that C wave could go, I still think we have the ability to come down and test 1262. That would be the 61% retracement, of course, of this overall move. Now, that is the bear side of the coin. On the bull side of the coin, and yes, traders, I believe there is a bull side of the coin, and that is after the conclusion of this A, B, C progression, we then go into an impulse phase, and that impulse phase should be a series of 5 waves moving higher, with our waves, of course, 2 and 4 being our corrective waves, and our impulse 1, 3, and 5. Now, another chart that we have been looking at, of course, is our Andrews Pitchfork. When we look at the Andrews Pitchfork, you can see this is the dynamic rally that we had beginning of 2014. This, of course, has been our market moving back down, and you can see it made a little clip up, but I believe once again it's going to come back to kind of hold and find support on this 23%. I then believe what we should see is that impulse wave, and the way that we'll really get some pretty solid technical evidence that we've hit that impulse wave is, in fact, if I should say, we cross through this long-standing cascading set of channel lines. Now, with gold trading down, we have gone back to a 2-week low. And when we consider the fact that we had this tremendous engulfing, this is a weekly chart, of course, a tremendous engulfing bearish, we received confirmation long term, but then we had 2 weeks really of recovery. That's right in here, that's that clip up. And then, of course, this is last week right here. Last week, we got another engulfing bearish. Of course, it's very early in the week, but so far we have got another red candle that is being formed. That, of course, is on our weekly chart. And then, of course, when we look at our daily, we really get a clearer feeling of our set of waves, of course, and this market moving down, a move back to what roughly, as we talked about, a 50% retracement of this move down, gives us our A, completes our B, and I believe that all evidence absolutely points to the fact that we are still in terms of our subcount, that C wave with lower pricing ahead. So in terms of long-term chart damage, I really don't think we've seen it. I really think that this last corrective action that we've seen was to be expected. I believe that what we are witnessing really is that last part of wave 2. And so what we're looking at as this market comes down, it concludes this corrective phase. We get a 1. We're going to complete our 2, and then we will go into our 3. That's the most primary of the models that we're looking at. There's a couple other models that I do want to bring to you this week that I've kind of looked at and seen if there's any plausibility or what kind of weight they'll have, and I'll present those to you through the rest of this week. So with silver breaking down in the way that it did, we're looking at a daily chart. Where could we see this market go to? Well, I don't really see any kind of real support that's going to come in until we hit this band here. And this band here starts at around 1900, 1900 being this low right in here, up to about, call it 1915, 1920. When we look at the activity that's occurred around these areas, we do have series of lows here. This is I remember that day specifically, but which is a true print, but I'm going to disregard it in terms of where I think the range is going to go. I would look at the low end at around 19. So if we see the market in gold go to about 1262, 1265, that's the bottom I'm looking for. We'll probably see silver bottom out at around $19 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.